You see, that's all noise. Now, if it suddenly there was this big squeeze and tomorrow it went to 95, I'd probably sell. But if it doesn't go to 95 tomorrow or the week after or the week after that or the month after or by Christmas or by next Christmas, when it gets to 95, I'll probably sell. It's likely going to 100. When it gets there, I'll make a decision on whether I think it's going to go to 200 or not, which it probably won't.
By the time you get this out, silver 1 year ago was $28. I don't know if it'll be next year. I mean, that would be a hell of a move. I wouldn't surprise. Listen, when I started trading, Danny, the Dow Jones Industrial Average was 800. Now it's 48,000. Silver at 100 wouldn't have surprised me if silver was at 200 at some point. Again,
Clem Chambers and Todd Bubba Horwitz reflect on silver's accelerating path and the psychology that surrounds primary price levels. They note that short-term volatility is mostly noise, while the larger structural trend matters. Chambers points out that if silver suddenly spiked to the mid-90s overnight, that would be the kind of extreme move worth considering a trim. But if it takes its time and grinds toward $95 or $100, the long-term upside case remains intact. Horwitz adds a broader market context, reminding viewers that when he began trading, the Dow stood near 800 and now sits around 48,000. In that framework, silver at $100 or even $200 over a longer horizon isn't unrealistic. Momentum, supply pressure, and market psychology all point toward higher territory as the cycle matures. If you found this analysis helpful, make sure to hit that like button, share it with fellow investors who follow gold and silver, and subscribe so you don't miss the next big update.
It took them, fortunately, it went down on Friday night for us and we were market side. And it took them to like Sunday evening to go, hold on a minute, clunk, 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 up it came. So that's the typical thing. It can never fail. No. Redundancy. Oh, redundancy from redundancy. Oh, so many redundancies. Oh, no single point of failure. Bang, down it goes. So, yeah, it absolutely can happen. And it absolutely does happen. We had Cloudflare blow everybody up only a few days ago. And, no, it couldn't possibly. Bang. So it can very, very, very much happen. But of course, if you run out of silver, you can't just start a silver mine overnight and pull out silver. You can't suddenly get it. OK, and so, you can do all sorts of things with computers. It takes a weekend. But when you run out of silver, or the herd, the masses show up and say, give me some of that, will you? It just isn't there. And they just can't get it. And silver mines take 5 years to dig. But you see, that's all noise. Now, if it suddenly there was this big squeeze and tomorrow it went to 95, I'd probably sell. Yeah. But if it doesn't go to 95 tomorrow or the week after or the week after that or the month after or by Christmas or by next Christmas, when it gets to 95, I'll probably sell. And I really, really don't care whether it's today, tomorrow, next week, next month, next year, or the year after that. That'll be fine by me to hang around for 18 months, but I think it'll be faster. So, if you're chasing the daily move, you're a day trader. Yeah. That's a great way to lose all your money. If you're chasing the move in the next 3 months, well, you're positional, and that's quite a sweet spot for these sort of things. If you're strategic like I am, you don't really care. I won't be sweating until we get in the 80s. And then I'll be going, what about tomorrow? Because it'll be approaching that, 100. Yeah. That I see is not fate, but likely. Yeah, okay. It's likely going to 100. When it gets there, I'll make a decision on whether I think it's going to go to 200 or not, which it probably won't. So, it's like if you're going to be an investor, that's the best way to be. You can't help watch it every day because it's fun, right? But all this short-term stuff, it's like back in the day with Bunker Hunt. Oh, it's a corner, it's going to go through the roof. Oh, they changed the rules. Oh, it didn't go through the roof. Yeah. The point is that silver is a strategic metal. There's not enough of it. And one way to look at it is this. Gold, 3,200 tons a year is mined. Silver, 25,000 tons. That's 8 to 1. Yeah. That's all you really need to know. And if all of a sudden there's more demand for it than there is supply, it will go to some sort of balance. Yeah. And, is that demand going to be maintained for the long term? I believe it will. I think silver is going to be very, very important in what's up for next. So there will be the use case for silver is such that its price will be significantly higher than today. So although I can do, the silver is running out dance, I don't really, it doesn't bother me. If they run out of contracts tomorrow and it goes to 200, well, yeah, I'll sell. Yeah, because that will be a short-term thing. The long-term price is different. Mm-hmm. And that long-term price, if you want to really know what it is, just look at a sort of moving average. and look at the trend on the moving average. And if you go back, say, I don't know, 100 days, 200 days, 3 years, don't care, it will be on that trajectory, and that trajectory will keep on grinding up. So, the true story is somewhere between where it's going to be in 3 months and a year. Okay. And I'm riding that picture, and that picture to me, it's not a sovereign demand. Yeah. Sovereigns don't care about silver. They care about gold. Yeah, sovereigns care about metals or value they can put in a battleship and sell somewhere. And silver's too light for that, which is why the Americans threw it in Manila Bay when they left the Philippines at the Second World War, took the gold, threw the silver in the bay. It's too light. Okay, I would say if I was really thinking that was coming, which it probably is, platinum and palladium's good for that, because that is heavy and you can pack a lot of that into a sub, but not silver. However, silver is a strategic metal in two places. One, at retail. And when retail are seeing gold doing what it's doing, and it's going to carry on doing that, they start to think about, I think I need to load up on that. And of course, gold is, for $50, you get a tiny piece, whereas silver, you get a nice shiny lump. And $100 is still a nice shiny lump for $100. $100 don't get you much shiny these days. Yeah. So with retail going with the flow, getting a bit of FOMO, that is the juggernaut. That is the unstoppable horde. And if they get a flavor for silver, and they are getting a flavor for silver, they got a flavor for gold. Now they're getting a flavor for silver. Well, that's a juggernaut that will drive things to $100. Now, behind that is a strategic need for silver in AI. And any hard commodity is going to stop being a commodity. It's going to become a luxury. And I've been saying this, it only dawned to me. I was at a gold show, the Gold Messe show in Frankfurt, with a lot of people that have been following gold and all that stuff for a long, long time. And they're talking about commodities. And that word was just buzzing in my brain. I thought, these aren't going to be commodities.
Clem Chambers captures the reality of today's silver market with a calm, strategic view rather than emotional trading. He explains that system outages, contract glitches, and exchange failures are noise, but real shortages in physical silver are not. Mines take years to bring new supply online, while global demand, from industrial uses to retail buying, is accelerating far faster than production. Chambers notes that the actual move isn't in day-to-day swings, but in the structural trend, silver grinding higher as supply tightens and investors awaken. Retail demand is becoming a powerful force, especially as gold's rise pushes new buyers towards silver's relative value. With industrial needs climbing and strategic demand increasing, he sees $100 silver as a natural destination, driven by fundamentals rather than hype. Let's get into the interview.
Well, maybe now it'll go over $60 before year end. You know what? It looks great. It looks better than gold right now, and it continues to move higher. And we've now broken through that barrier. This was not a short squeeze rally that got us here. This was a real honest to goodness, real new money buyers coming in. So I think it looks really good. It wouldn't surprise if we got over 60, but again, it should never surprise anybody when there's a pullback. One of the biggest problems that most people who buy precious metals or trade the futures market in precious metals, they over leverage themselves, so they're forced to sell when there's any sort of downward bias. And then they get out and they say, well, why did it not go up? Well, again, the market looks great. The charting, the pattern looks great. The use of the metal looks great. So just continue to hold on to it and make sure instead of leveraging stuff you can't afford, buy physical metal that you can't afford. I think you continue to buy. Look, it depends on your objective. Okay. If you're a trader, I probably would not be a buyer here as a trader. Okay. But if I'm going to buy it and put it away, then yeah, I'd be a buyer here. You know me, I'm a consistent buyer of gold and silver and platinum at all times.
Yes.
Obviously, I'll buy more on the dips when I'm ready to buy. But I think people look at things in the wrong fashion. I'm looking for the future. I'm not taking my car payment or my mortgage payment to go buy gold or silver right now. I'm taking investment dollars that I plan on holding. Listen, the truth of the matter is the gold and silver that I own and the platinum, my kids will sell it. I'll never sell it because I don't have to sell it. So if you buy what you can afford without taking food off your family's table so you can enjoy Thanksgiving, you can enjoy Christmas, then you just buy it whenever you want it because you're basing on the fact that the appreciation of these asset classes, these hard assets, will appreciate, especially in times and what's going on now with the government, with the Federal Reserve, with inflation. These prices should continue to rise. Okay, and when they sell off, you should be willing and ready and prepared to buy more. That's the way that you invest, not looking to scalp a quick dollar or two here. You're looking for the long haul. I mean, I've been buying silver.
Amen.
$10. By the time you get this out, Silver 1 year ago
No.
was $28. I don't know if it'll be next year. I mean, that would be a hell of a move, but I wouldn't surprise. Listen, when I started trading, Danny, the Dow Jones Industrial Average was 800. Okay, now it's 48,000. Okay, silver at 100 wouldn't have surprised me if silver was at 200 at some point. Again, we have to base everything on the inflation that is coming forward. You know, if you go back to
Exactly.
1985, the average house was 75,000. The average income was 25,000. So it was 3 times your income to buy a house. Today, average income 70,000, average house 500,000. So it's 7 times. And I expect the metals to do that.
Silver's advance above the $50 barrier has created a stronger, more confident trend, and Todd Bubba Horwitz highlights that this latest push isn't a short squeeze anomaly, but a flow of real capital finally entering the market. Structural demand, steady accumulation, and a healthier technical backdrop give silver far more momentum than gold at this stage. He stresses that real investors avoid leverage traps, buying physical metal with long-term money rather than emotional trades that force selling on dips. The perspective remains simple. Treat silver as a multi-year hard asset position, not a quick scalp. With inflation compounding across every sector of the economy and asset prices adjusting upward, Bubba notes that silver's rise toward $60 and eventually toward triple-digit territory fits the broader trend of monetary debasement and shrinking real purchasing power. For long-term holders, the path ahead remains firmly upward. If this gave you value, smash that like button, share it with those paying attention, and subscribe so you don't miss what's coming next. Stay alert, stay prepared, and keep stacking tangible assets.